Hello everyone, this is Keerthana, Assistant Professor, Department of Commerce. Today I am here to present a lecture series on the subject Direct Tax Law and Practice on the topic Assessing, Assessment Year and Previous Year. So first we can see the concept of assessing, assessment year and previous year are crucial in understanding taxation. So this presentation will help to clarify the definition and significance of tax computations. First, defining assessee. First we can see the understanding of assessee refers to individual or entity legally liable to pay tax. So there are types of assessees which includes individuals, firms, companies and organizations, each with unique tax obligations. And next is role in tax filing. So responsible for filing tax returns, maintaining records and ensuring compliance with tax laws. So first we can see what is assessment year. So assessment year is the period during which income earned in the previous year is assessed for tax purposes. So it is important to allow the tax authorities to evaluate income earned and tax payable for compliance. For an example, income earned during the financial year 22 to 23, the assessment year will be 2023 to 24. So exploring the previous year, which is what is previous year. So previous year refers to the financial year preceding the assessment year during which income is earned by the assessee. It is crucial for tax calculations. Financial year timeline, which is the previous year, runs from April 1 to March 31 and is the period in which all income, expenses and deductions are accounted for tax purposes. So relevance in taxation under the previous year is essential as it directly impacts the income assessment and tax liability for the assessee in the following year. So key difference in taxation terms. So assessee versus assessment year. An assessee is an entity liable for tax while the assessment year is in the time frame for evaluating income. So assessment year versus previous year. So the assessment year follows the previous year, establishing a yearly cycle for income assessment. Next is importance of distinction. So understanding these differences aids assessee in effective tax planning and compliance. Next is practical implications, which is so first tax planning, compliance requirements and impact on financial decisions. So in tax planning, understanding these concepts aids assess in effective planning, enabling the strategies, deductions and minimize tax liabilities. So in compliance requirements, assess must comply with various legal requirements including timely filling of returns for both the previous year and the assessment year to avoid the penalties. So impact of financial decisions, in the sense knowledge of these terms influence financial decisions affecting investments and savings as assess aim to optimize their tax outcomes. So first is what is assessee. So an person or an example for an individual or an entity who is liable to pay the taxes is called as assessee. So there are types, which is individuals can pay the tax, a firm should pay the tax and company or else organizations or a unique tax obligations. So it is responsible for filing the tax return, to maintain the records and to ensure that tax laws. Next is what is assessment year. So we have seen that assessment year is a previous year for the tax purposes. So it is allowed to tax authorities to evaluate income earned and tax is payable for compliance, which is, so if we are in the 22 to 23 and the assessment year will be 23 to 24. So which is previous year, in the sense financial year preceding the previous year during the income is earned by the assessee. So the timeline will be previous year runs from April 1 to March 31 and in this period of all income, expenses, deductions all will be accounted into the tax purposes. So in relevant to taxation, previous year is essential to direct the impact of assessment and tax liability of the assessee during the assessment year. So there is a differences in taxation terms is assessee versus assessment year and assessment year versus previous year and importance of distinction. So in assessee versus assessment year, it is liable to pay the tax while the assessment year is in time frame, and in previous year is establishing a yearly cycle for income assessment. So in distinction, there is a difference between assessee in effective tax planning and compliance. So in upcoming to practical implications, one is tax planning, compliance requirements and impact on financial decisions. So tax planning is compulsory to effective taxes, and for compliance requirements it should be a legal requirement for filing of return in the previous year and the assessment year to avoid the penalties. And for impact on decisions, knowledge of these terms influence the financial decisions affecting investment and savings. Thank you.